if you believe that the cycle is changing and we are in the starting point, and there is another 2 to 3 years of room available, this is a good entry point, and you should not keep your cash idle. You need to put it to work very hard immediately. Money is like water, right? It is going to go where they are going to get better return, and our currencies are cheap, our assets are cheap. Every country has its own competitive advantage, correct? So God's grace, Indonesia is blessed with commodity and natural resources and potential for tourism, etc. So we should be happy about the blessings that we have received. The whole objective of investment is you are building your purchasing power, correct? If you don't build your purchasing power, your money is going to lose its value over a period of time.
Halo, selamat datang di Podcast Bareksa Insight bersama saya Hanum Kusuma Dewi dan saya bersama dengan CEO Bareksa, Niputu Kurniasari.
Halo.
Dan kami kedatangan tamu yang spesial, yaitu Presiden Director CEO dari Principal Indonesia, Bapak Naresh Krishnan.
Okay. Halo juga.
Terima kasih. Thank you for coming to Bareksa. Okay. Maybe kita akan ambil dalam bahasa Inggris ya. Jadi we will make this conversation in English ya. Okay. We will talk about the investment industry in Indonesia and from the point of view of global investors. Maybe you can represent as one of investment managers ya from global investor. Okay. And how do you see that the penetration of Indonesia is still investment in Indonesia is still low compared to other countries? Yeah.
Before that, I think our viewers must know that he is one of the legend.
Oh yeah.
Because you already have, how long been you in Indonesia?
25.
Almost 25 tahun.
So 25 years in capital market in Indonesia.
Yeah,
so basically you already know what's going on happen in capital market in Indonesia.
Yeah.
So first of all, thank you for this wonderful opportunity. It is lovely to be with all of you in your office. Really appreciate it. This is a question, why the mutual fund penetration in Indonesia continues to be still low, even though the industry has been in existence for from 1996 onwards, so almost 25 tahun we have been in existence, and why the penetration is very low. Actually, the interesting thing is, this is a question that we analyze day in and day out while building our business, you understand? No? So what are the issues, what are the challenges, and what is the opportunity? This is something that we look at it all the time. And as I was joking, we can spend the whole day only discussing this question alone. There is so much of nuances in that particular topic alone. But I want to stay simple, make it easy. We need to break down this into multiple components. The first one is, first of all, we need to understand Indonesia itself better, right? So most of the foreign players, when they look at Indonesia, the first thing that attracts their attention is 280 juta population, right? And then one of the largest economy in ASEAN, 1 trillion ke atas, right? So $1 trillion economy, 280 million population, and clearly that is what excites everybody when they come to Indonesia. But the interesting thing here is, if you look at the wealth concentration, you know that in Indonesia, most of the wealth is concentrated with very small population. That is something that we need to identify as a factor, correct? So if you look at the deposit guarantee, the institution, and they have a wonderful statistics. Less than 2% of the bank account holds 85% of the bank deposits in Indonesia. So that is something that so the real wealth is restricted to a very small population. I think the more the middle class emerges, the more the wealth get distributed, then automatically you will see much more prosperity and improved penetration coming into the mutual fund industry. That is number one, purely on segmentation and disposable income perspective.
Yeah.
The second issue I face in Indonesia is our markets fail to deliver. You understand now? So if you look at our stock market, you look at the last 10 years, the performance, even though the year to date, last 1 year, we are seeing some good life, especially for the last 2-3 days, we are seeing a lot more excitement in the market. But if you take a 10-year view, our equity market has actually underperformed, you know. And once again, we have two indices. We have JCI, we have LQ45. I want to focus on LQ45 because these are the most liquid stocks, the large cap liquid stocks, and so the price realization is more appropriate in these stocks. The 10-year performance of LQ45 is only 78%. For 10 years, it has only delivered 78%. Maybe you can add a little bit more dividend on top of it, you understand now? But still, even if you add back the dividend, still it has delivered less than what a bank deposit would have delivered. You understand now? And that is the fundamental issue. Our markets are, just to give you a comparison, this year the Indian mutual fund industry is the hottest industry, correct? The AUM of the Indian mutual fund industry has grown by 43% year on year.
Oh.
Just 1 year, 43%.
Yeah.
Do you know what is the 10-year performance of the, we have a indices in India called as Nifty 50, the top 50 stocks in India. It has delivered 222% over the same 10-year period, not including dividends. That is the difference. People say why India is doing, you know, because I'm Indian. The first thing people ask me is, hey, India is doing so well. Why is it we are not able to? Unfortunately, I'm in Indonesia, right? And so clearly, when you look at the fundamental, clearly the underlying market has not delivered much. You understand now? Now, the third interesting aspect I want to bring to your attention, and in the good old days, you know, the mutual fund industry had some tax benefits. So we were able to, when people invest through mutual funds in obligasi pemerintah, we had tax advantage, and we were able to manage the money and deliver the returns to the customers, and they had advantage for that. You understand now? Once the tax advantage was removed, and then the government is automatically retailing the government bonds, has taken a big business opportunity out of the mutual fund industry. So we have been crowded out, disintermediated in the whole process by the government itself. You know? So if you look at the government bonds alone today, right? In 2013, the public had only 3.5% exposure to government bonds. But today, I think it is not even 2013, it was 2018. From 2018 to today, the public holding of government bonds has grown from 3.5% to almost 8 to 9% today. Almost 400 to 500 trillion of retail money is directly going into government bonds. Whereas during the same period, mutual fund investments in government bond has actually come down significantly, correct? So once again, we are actually competing with the government in terms of managing those monies and adding value to those monies. That is the third item. The fourth blow, I would say, is coming in from the regulatory environment. In most of the countries in the region, institutional investors work with investment managers to manage their money. So institutional investors are a major players. Because, for example, even in Indonesia, general insurance, life insurance work with investment manager to manage their money, correct? Because of the OJK regulation on payee, significant portion of money has moved away from the mutual fund industry and moved outside of the mutual fund aspect. And that has a very significant impact to the market as well, correct? In the good old days, 30% of our equity market was invested by domestic institutional investors. Today, that portion has come down to 15%. You understand? No? So dramatically, the domestic institution participation in the market has come down, and once again, the opportunity for players like investment manager also has come down. So if you add up all together, you can see that is why the 3% of the GDP as a penetration level is so low compared to other countries in the region because of these reasons. I hope I did not take too much time, but this is the reason behind it. So the only way to improve penetration is we need to address all these issues, correct? The most important one for me is how do we deliver alpha? How do we deliver sustainable, consistent, good return to the investors? If you do that, then only people are going to come to this industry. If you don't deliver returns, there is no reason for any investors to be part of this industry. So the most important thing is delivering best risk-adjusted, decent return to the customer. And that is going to be number one. Of course, corporate governance needs to improve, transparency needs to improve, people feel a lot more confident and feel at ease investing through investment managers, through the mutual fund industry. All that will add to the growth of the industry.
I understand that about the competition with the government bond, the yield is quite high for now. But you think that this is still a good time because currently the deposit rates is getting lower. So I think this is a good time for the investment to grow.
I think this conversation that we are having is the best timing, you understand? No? So our market actually for the last 4-5 years, we have been suffering simply because of the high inflation, high interest rate in developed economy, in particularly the US, and the high interest rate supports US dollar. That's why strong dollar was there, and most of the monies were flowing back to US dollar, and we were all suffering a lot across the emerging market, in particularly ASEAN, including Indonesia. We have been challenged because of that. Luckily, this week is a good time to talk about it. I think we were expecting, even in June, we were expecting a rate cut from Fed, but that got delayed, and you know, so it has been a little bit more long-drawn process. But the good news is, finally, the Fed, by cutting down 50 basis points, is sending a message that the inflation is under control. Correct? That is the that is the biggest issue that we had, and that is what Fed was fighting, managing the inflation. So today we can say that that fight is over, and the inflation seems to be under control. Okay. So if you really look at, they call it as a Fed dot plot, right? It is not only the 50 basis points cut that we saw this week, but we are also expecting another 2 more cuts in 2024, correct? In November, they are expecting 1 cut of 25 basis points. And in December, we are looking at another cut of 25 basis points. And if you get into 2025, the market is expecting another 4 more cuts of 100 basis points. And we get into 2026, the market is again expecting another 2 cuts of 50 basis points. You understand now? So for me, this is the catalyst. This is the change in the cycle that is taking place, where we are moving from high interest rate to a much more acceptable level of interest rate, thanks to a little bit more stable inflation. So for me, I think we are very well placed. So you already saw in the last 1 month, our equity market has done very well, our bond market has done very well, and our currency has done extremely well, and all is supported by foreign flows. You know, in just 1 month, we have seen our currency from 16,300 strengthening to today to almost 15. I think by the time we finished the meeting, it would have breached the 15,000 level. You know, it was 15,075 earlier in the morning. You understand now? But don't forget, this is not the end. This is the starting point of the correction in interest rate. And if this trend continues as per the expectation, clearly this is going to favor emerging market. It is going to favor ASEAN. It is going to favor Indonesia. And we will see our economy is getting a little bit more normal, money flowing back. And the more the deposit rates comes down, the more people will be willing to take a little bit more risk and willing to invest in riskier assets. And that's why the whole change in cycle is taking place as we speak. And so I think today we are in a very different cycle, and hopefully the next 2 to 3 years is going to be very exciting. So hopefully we should have this conversation every year to see how the penetration is improving on a yearly basis.
Okay.
But also tips for the investor based on your 25 years experience. I think this is really the good timing to move to the investment. So some of the users still put the money only. I see the investment is too risky, but for now, because the interest rates getting lower, you can get any return if you just sitting your money only in the like the deposit, right?
Yeah.
So based on your experience, this fluctuation on the investment thing getting better. Yeah. So maybe it's the good time to ask like the investor to move the money to.
Absolutely. I mean, absolutely, you're bang on correct. I mean, the most important thing is most of the people are only looking at it from a short-term perspective, correct? They look at headlines saying that the Indonesian equity market is all-time high. So the moment it is all-time high, that means we need to book profit and we need to get out. That is the kind of mindset that we have. But the truth is, this is the time to enter. People are not aware. But if you're a day trader, maybe, okay, it is time for you to book profit. But if you're a medium to long-term investors, this is the right time to actually enter the market. If you have a 3-year, 5-year view, this is the right time to enter the market. I will give you a simple example, correct? You take the equity market. When we do the equity market valuation, we take what is the risk-free return we are getting and what is the compensation that we need to get for the risk that we are taking, correct? So the moment the risk-free return is coming down from 7%, 8% to let's say 5%, 6%, automatically the valuation of the entire market will change, correct? So I can give you an example. You said, I have 25 years experience, correct? Historically, Indonesian stock market trades at 16 times PE multiple, average, correct? In good years, it has even gone up to 20, 21 times earnings. In a real bull market, we have seen going up to 21. But if you really look at our market valuation for the last 2 to 3 years, we have been trading at 12 times earnings. And we have been, today, luckily, with the last 1 year, we have seen the market moving up a little bit. Today, we are trading at 15 times multiple, correct? But clearly, if our market gets re-rated because of the interest rate cuts that we are looking at, clearly there is going to be a re-rating of the valuation that is going to take place. And most importantly, the corporate sector also is going to do better, correct? Your working capital become cheaper, correct? So automatically that is going to benefit the company's balance sheet. So that needs to get additional valuation. And then if the interest rate is low, obviously people are going to buy more cars, more scooters, and more properties. So there is so much of consumption that is going to improve because of lower interest rates. So that is going to once again support the companies and the equity valuation. So if we will have a multiplier effect, and that is why, so based on our own calculation, based on the earnings growth that we plan to have in our market for the next 3 years, okay? And plus the re-rating on lower interest rate projection, we see our market can touch 10,000 in 3 years' time. So by 2020, forget about 3 years' time. In 2025, you could see a minimum 10% to 30% return from our equity market, only purely from a valuation perspective. If the Fed...
So it is just coming from the re-rating?
Re-rating plus earnings growth as well, and plus valuation. You understand now? Only if you get another 6 rate cuts of 150 basis points, okay? And if our economy continues to do well and continues to become stronger with the new government coming in and with all the new policies that are going to put in place, we could potentially see a 10 to 30% return in our equity market. And this is very much within our grasp as well. And the same thing holds good on the bond as well, correct? On fixed income as well. So even if you have so today the 10-year yield is at 6.4%, 6.5, 6.4 today. And if we see at least there is a 80 basis points, the yields can go down in the next 1 year period. That could deliver a 5% capital gain on bond and plus the coupon. So once again, we are looking at 9 to 10% return in a bond fund as well. So whether it is fixed income, whether it is equity, whether it is onshore, whether it is offshore, the opportunity is there. I think my advice to investors would be, if you believe that the cycle is changing and we are in the starting point, and there is another 2 to 3 years of room available, this is a good entry point, and you should not keep your cash idle. You need to put it to work very hard immediately. Because you won't get this kind of an opportunity. This is once in a lifetime opportunity. You don't get this kind of a change in cycle taking place every other day. It happens once in 3 years, once in 5 years, you understand? No? So we need to capitalize on this opportunity, and we need to invest for the long term, and we need to capture that. My only piece of advice is diversification, correct? So don't put everything in a single place. Diversify and keep it for a longer period of time so that you are able to manage the volatility and you are able to build wealth over a longer period of time. That would be our advice to our investors. I think this is the time to take action. This is not a time to analysis, paralysis, I think we had enough time to do that. This is the time to take action, and we should be moving forward. You look at it, for example, we launched a product called ASEAN Fund because we believe ASEAN is well placed to capture it, correct? In the last few months, the fund has delivered 10% return. And not only Indonesia is doing very well, not only our currency is doing very well. You look at Malaysian ringgit, correct? Malaysian ringgit moved much, much more stronger in the last 1 month, and the Malaysian markets are doing very well. And the same holds good with, even though Thailand had some political issues, still the Thai market is doing very well. Vietnam market is doing very well. And so the fund has actually delivered 10% return from its low. And clearly it is poised for further gains as well. So there is plenty of opportunity around, and we should be capturing that.
So this opportunity not only in Indonesia but in regional as well.
Yes, because most of the our region is still considered an emerging market, and all of us have been suffering, you understand? And so the flow is coming into emerging market, and clearly I think destinations like, I think Malaysia and Indonesia seems to be benefiting a lot more compared to the rest of the country in the region.
Jadi kita jangan sampai ketinggalan.
Don't visit.
My clear advice, you should take action now.
And earlier you said that Rupiah strengthened from 16,000 to 15,000. Is it normal? Only in within 2 months we have the strengthening like this. And how can the investor take advantage of this?
So this is a very interesting topic. You know, people, when they analyze it on a short term, they are stuck with their ranges, correct? But we are not in a normal period where we are talking about range-bound movements, correct? We are saying a change in direction, a change in cycle, you understand? And then we need to look at how this cycle is going to play out and what could be the potential. If the US interest rates is going to come down by another 200 basis points over the next 24-month period, automatically the flow will normalize, correct? Earlier the flows were all going to US dollar because you are getting 5%, 6% return in US dollars, so why you do anything else, you understand now? But if that return is going to 3% level, automatically money will chase. Money is like water, right? It is going to go where they are going to get better return, and our currencies are cheap, our assets are cheap, and so the flow is already. In 1 month's time, you have seen so much of changes, correct? Imagine what is going to happen. And in 1 month's time, it is only 50 basis points cut, and we already saw so much. Imagine if you're going to see a 200 basis points cut over the next 2-year period, that flow will steadily come in. Okay. Now, I also want to showcase one example, correct? During the Asian financial crisis, I think we were talking about the Rupiah, correct? Rupiah was 2,400, correct? Exchange rate. Then it went to as low as 17,000 Rupiah. Do you know how far it strengthened? Any idea?
No.
Do you? So you will be surprised, correct? When it went to 17,000, everybody said it's going to go to 20,000, correct? I mean, that is a natural evolution. From 17,000, the Rupiah strengthened to 6,500. Wow. Nobody, all of you are young, so you don't have that generational information. From 17,000, Rupiah strengthened to 6,500.
Wow.
Okay. So if the flow is in our favor, if the global flow is in our favor, I'm sure currency has a lot of room to play out as well, correct? You look at all the developed market, correct? Everywhere people are worried about high debt to GDP ratio, correct? Even in US, that is the hottest topic. Europe, everywhere, all the developed market, this is the hottest topic. You look at Indonesia, our debt to GDP ratio is only 38%, correct? And that too, the external debt is only 14%, you know? So we are looking much more stronger from a financial, fiscal discipline perspective. We are in a much more stronger position, correct? As long as our economy does very well, and as long as the policies are in the right direction and the focus is on growth, I'm sure we can attract a lot of inflows, given that the change in direction and the change in cycle is taking place at this point in time.
And given these economic fundamentals Indonesia has, do you think that Indonesia can get upgrade in rating from a global rating agency?
It is clearly, I think, the only reason is our currency has always been a little bit more volatile compared to other currencies. It is improving. Let's be very realistic. Our currency has improved a lot in terms of stability over the last 5-year period. So clearly, I think we are doing much more better. I think we deserve a better rating. That's what we should be.
Maybe in next year, or
hopefully. Let's see. How it all depends upon the overall global stability, etc. Correct. So
So Indonesia is look like similar like what countries like we quite amazed with like India. Can we go like India or China?
This is a
in terms of the investment,
I mean, having worked in multinational companies, correct? This is the topic that I have all the time. You understand now? So most of the companies I worked with used to have big operations in China, big operations in India, and they look at the population, right? And they eventually think Indonesia has to be like China and India, and there is a natural expectation that Indonesia should follow them. You understand? So, but I think my experience is having worked in multiple countries in the region and worked on a regional role as well, covering whole of Asia. Every country has its own uniqueness, its own evolution, its own competitive advantage, its own issues, etc. So I think it is very difficult to compare, especially from a mutual fund industry perspective, correct? It is because our industry is heavily regulated, and for the right reason, because any industry that is taking public money needs to be properly regulated, and that is the reason why we are a highly regulated industry. And so the regulation plays a very important role in determining how the industry is evolving. And unfortunately, our regulation has been very tight for the right reasons. We have been very tight, and so that is the reason why we have been suffering a little bit over the last few years. You understand now? But I think every country has gone through the same experience. For example, we are talking about India, correct?
Yeah.
Today, I think I was mentioning, right, if you take the mutual fund industry, one country that is really rocking is India. As I said, year on year assets under management growth is 43% growth in just 1 year, you understand now? So clearly doing very well. But if you really take a decade ago, you went there, the industry also went through a lot of regulatory changes. So for your information, the Indian regulators are very, very particular about the expenses charged to the customers, okay? There was a clear, so in India, if you go and look at it, there is no subscription fee. There is no front-end load. So you cannot charge any subscription fee for buying a mutual fund in the Indian market. When the regulation was launched, I mean, the whole industry was complaining, okay? And then the Indian regulation also came up with very stringent expense ratios. So how much you can, what is the management fee that you can charge, and what is the kind of expenses that you can incur in the mutual fund, and what should be the total expense ratio. They basically tightened it up so much. Once again, there was a lot of hue and cry. But because of all the changes in regulation, today the investors got better value from the industry. They got better return, and today the industry, everybody today talks about how great the industry is doing, but obviously it also went through its own evolution, its own changes, and obviously we will go through that, and we will come out, we will emerge stronger, and hopefully much, much more better in the years to come. Correct.
Yeah. So,
But the fundamental is corporate governance. I think corporate governance. So when an individual investors or any investors investing in the market, they should get the right return for the risk that they are taking. Correct. So corporate governance, transparency, all that becomes the backbone of building our industry. I can give you a great example. Correct. You look at the Japanese market. The Japanese market was struggling for a long time, okay? And the performance was very, very weak, okay? The regulator came out with a very, very stringent requirement, forcing all the emittents that they need to come up with a clear plan of action on how they will deliver the return to the investors. And they have established a structural mechanism where all the corporations should return to their investors, and that should be their priority. And today, in a year's time, you can see the Japanese market is doing extremely well, and everybody is only talking about Japan equity. You understand now? And that is driven by that particular regulation, which is to protect the investors and deliver returns to the investors. Now, following the Japan experience, now Korea is also trying to replicate the same model. Now, if you look at Singapore, last month they had the same debate going on as well. So I think it is very, and these are all developed market. These are not even emerging market like us. They are all developed. I'm talking about Japan is a developed market. Even there they have these issues, and they are pushing the limit, and they are trying to do the right thing for the investing public. I think there has to be greater emphasis that investors in Indonesia needs to get the right return. And more efforts needs to be placed on that. And the more we do that, the more the industry becomes stronger, and automatically we will see people comfortable with our industry and money flowing in, and the penetration rate increasing dramatically as well.
So that's become the strategy for the principal for the next year.
Oh, our strategy is very, very straightforward.
Because we don't want to lose this momentum, right?
Momentum, correct. So clearly, I think what we want to do is, how do we come up with investment themes that will be attractive to the market? You know, the problem in our market is there are too many fund managers and there are too many products, but there is not much difference. There is nothing wrong in having too many fund managers and nothing wrong in having too many products, but not much differentiation, right? It is the same Indonesian equity and the same government bond and the same corporate bond and money market, you understand? Sometimes, you know, I feel a little bit bored because I keep talking about the same thing for a very long period of time. How long you can talk about it, you understand? No? So I think the key is, how do we differentiate, you understand? Now, and that is where I think if you look at all other countries in ASEAN, we are lagging behind as well. So for example, Principal is a market leader in the Malaysian market. So our business in Malaysia is one of the market leaders, okay? But 70 to 80% of our assets in Malaysia is in products that are investing out of Malaysia. offshore
Oh,
investments.
offshore investment.
Big portion.
Yeah.
So for example, we are able to bring in our European and US capabilities and global capabilities. We are able to come up with real estate solutions. We are able to, you won't believe the kind of themes that they are bringing in, not only to retail, even for institutional clients, even for state-owned enterprises who buy through principal and access these opportunities.
Yeah.
We have a good business in Thailand. Do you know what is the best-selling product that we have in Thailand? It is not Thailand equity. It is Vietnamese equity. So we have a team in Thailand working on the Vietnamese equity market, and our best-selling product in Thailand is Vietnamese equities. I was in Philippines. I worked in Philippines for 7 years. You know, much more smaller country compared to Indonesia, but they have actually allowed us to invest offshore in a much more convenient, not only allowing to invest offshore, but also in a convenient manner, in a fund. So for example, right now in Indonesia, we are allowed to do it through a Sharia vehicle, correct? 100% can be invested if it is a Sharia fund. But once again, we need to invest in the securities, which becomes inefficient if the scale is not big enough to support it. Whereas in all these markets, they have liberalized ahead of us. Obviously, I don't want to give the Singapore as an example because they have always been, Singapore and Hong Kong has always been advanced, you understand? But countries like Malaysia, Thailand, Philippines have liberalized a lot more, but we are a little bit behind. And hopefully, if that happens, and I'm sure there could be much more variety that we can bring to our investing public. The most important thing is diversification, correct? You look at it, if Indonesians have to, Indonesian money, every Indonesian money belongs to Indonesia, right? The more the individual wealth grows, automatically the country's wealth also is growing. You understand now? So we need, if you have put your money in LQ45 for the last 10 years, you have not delivered any wealth, right? So at least we should have given, either we need to deliver that wealth generating opportunities or allow them to invest offshore and diversify and build that wealth, because it is our wealth, you understand? End of it, it is our wealth. So I think that is another area where there is a great opportunity, especially how do you diversify from a currency perspective. Of course, Rupiah is strengthening. At some point in time, you would like to diversify your currency as well. You want to diversify your asset classes, and there are so many things you can do. And I think opening it up, but the most important thing is it is not just opening it up, but coming up with all the supporting regulation, whether it is taxation, whether it is legal, whether it is, whatever it is, it needs to be aligned to support the industry. Then you will see penetration levels growing to a much more stronger levels.
Okay, so it must be integrated, with manufacturers,
Yes.
Okay, and you said that every country has.
Principal already have the offshore fund right now?
Yes, we have, and we feel that is a competitive advantage, you understand now, because we are a multinational organization, we have global capabilities. How do we bring our global capabilities to Indonesian market, and how do we deliver that? That is one of the area that we are looking at it. And within the Indonesian asset classes itself, we need to find ways and means where we can deliver better returns to our customers and create new solutions to our customers. And that is another area that we are focusing on.
Okay. You said that uniqueness, every country has uniqueness. But since 2022, investors have been aggressively hunting for artificial intelligence stocks, especially in global markets. And however, Indonesia still relies on commodity. So, do you think that it is still relevant for Indonesia to still rely on commodities, and investors still looking Indonesian stock?
It's a fascinating question, my simple answer is every country has its own competitive advantage, correct? So God's grace, Indonesia is blessed with commodity and natural resources and potential for tourism, etc. So we should be happy about the blessings that we have received. and we should be leveraging it, and we should be working on it to make it. So I think the entire focus on EV and the entire focus on how we can add value into the commodities market, etc., is the right approach, because that is our strength, and we need to build on our strength. Correct? I mean, that is the most important thing. You cannot build on something that you don't have from scratch. If you need to build, that is going to be much more difficult to build competitive advantage. So I think whatever is our natural strength, we need to build on it, and the government policy towards value addition in the entire minerals and mining and the EV ecosystem is a great strategy going forward, and we need to build on that particular capability. But when we talk about artificial intelligence or the themes like that, constantly there will be a new theme coming in. Okay, today is artificial intelligence. What was it a couple of years ago? Everybody was talking about data analytics. You understand? I mean, Python and data analytics.
Machine learning.
Every year machine learning. I mean, every year there is a new theme. Right? By the time you set it up, it is already gone. The next one is coming in. You understand now? So I think for that, I think the most important thing is we need to build our talent pool. You understand? So education, investing in education, especially in science and technology, and we have weaknesses in that particular area, and we need to backfill that before we can dream about getting into that. But having said that, Indonesia was much more ahead on digital technology compared to many developed countries. Yeah, for example, our success story in digital today is far more significant than many of the developed countries on the digital area. And all over the world, when they look at Indonesia, they only talk about the digital revolution that is taking place and how we can capture that into our industry or specific industries, and how do we progress on that. So, but I can give you another great example, correct? It's a COVID, correct? Okay. I think the way Indonesia managed COVID is far more superior and better than most of the developed countries. I don't want to name names because that will be too entertaining for your audience. You understand? No, I think we have heard all the drama in every country, but Indonesia did a great job. We had a very pragmatic approach of managing the COVID, and we did a great job, and we came out in a much more better fashion than many of the countries in the neighborhood as well as in the whole world. You understand? So I think we should not feel inferior because somebody has this, somebody has that. But I think the most important thing is what can we do with what we have and how we can build on that. That should be the real approach going forward. And that is exactly what we say in our business as well, right? It is applicable to even for our business. We need to find out what is our strength. You understand? So for example, if our strength is our risk management capability and our, our professionalism, doing the right thing, and our risk management capability, and plus our global investment management capability. These are our strengths. So how do we bring that to Indonesia, and how do we make that as our competitive advantage? I mean, I was joking to someone, I think I have the best compliance and risk management team in Indonesia. Nobody can beat my team on that particular area. You understand? Even though my joke is I want to have the best sales team as well. That is a joke that we crack. But what I'm saying is, being a multinational company, for us, when we wake up in the morning, risk management is above than sales target. You understand? And that's what we deliver. Everything that we do it in the right way, and we make the decisions without even thinking twice, you understand? And that is what we bring to the table. So we need to focus on our strength, and I think Indonesia has a lot of strength, and I think the talent pool is improving much more. I think Bareksa is a great example.
Thank you so much.
I mean, you can just walk down the office and you can see all the youngsters, and you can look at the infrastructure, etc. I mean, I don't think so. 25 years I saw an office like this, correct? Did you? I mean, no, I don't think so. So this is all great developments, and we need to leverage on that, and we need to build on those things, correct?
Okay.
Well, very insightful.
Yeah, insightful. Interesting. Okay, maybe this is the last question. Maybe you can share tips for investors of Bareksa for investing in this current condition like this.
I think as I mentioned, I think we are in a very, very interesting period of time. If we only look at the last 4 or 5 years, and if you make a decision based on what we have seen in the last 4 or 5 years, we are going to miss a huge opportunity. We need to take a step back and we need to evaluate and we need to accept the fact that there is a cyclical change that is taking place. And this is just the beginning of the cycle. And it has a long leg to go. It has another 2 to 3 years to go. And that means we need to position ourselves to capture that opportunity for the next 2 to 3 years' time. And it is moving in the right direction. It is moving in the positive direction. And it is in favor of Indonesia, in favor of ASEAN, in favor of emerging market. So our currency is going to do well. Our equity market is going to do well. Our bond market is going to do well. So depending upon your risk appetite, you should invest. I mean, if you're going to keep your money idle and if you're going to miss out this, and this is a once in a lifetime opportunity, you understand? No? It is not your trading, day-to-day trading opportunity, but this is a once in a lifetime positioning for wealth accumulation. And we should take this opportunity. And actually, we are a bit late. We should have done it 1 month ago. but you guys only invited me today, not 1 month ago, correct? But I think we should use this opportunity. And if we can take positions and if we can keep it for 3 to 5 year outlook, I'm sure all of us will be in a much, much more better position than we are today. And we should be very optimistic because things are moving in the right direction. But having said that, the risk is, there is always going to be risk, right? And I think the risk this time, the risk is more towards geopolitics. I think all of us, we have seen it for the last few years that the geopolitics continue to be challenging and it is going to be challenging, but somehow the market seems to be managing it, you know, even though there is a war going on, even though still the market is managing to overcome that particular issue. But we need to keep in mind what is going on in geopolitics. Except for that big risk, I think rest of it is moving in our favor. It is very, very supportive of long-term investing, and it is very, very supportive of wealth accumulation, and people should not waste this wonderful opportunity. That would be my advice.
So that's why also we need to do diversify, right?
Yes.
Because risks, we still come.
Yes, and that is why we always recommend diversification. However exciting that might be, you understand, even though AI looks very tempting, doesn't mean we put everything in AI. Right? We need to only put a portion of it, and you know, and but I think that is the key. We need to focus on building a diversified portfolio, which can withstand a little bit of short-term volatility, but will deliver better return over a longer period of time. The whole objective of investment is you are building your purchasing power, correct? If you don't build your purchasing power, your money is going to lose its value over a period of time. And we always need to go back to the drawing board. Why am I doing what am I doing? And so if you have that kind of view, clearly I think the next 5 years looks very, very attractive. Please utilize this opportunity.
But what is your recommendation for the principal product?
I think we are very, very positive on Indonesian equity. So we are overweight. So all our equity funds are overweight on equity.
We have IDX30.
IDX30 is one of the good options available. And especially in the good old days, in the last 4 years, it is the small caps that has been doing very well, or companies with very little float has been doing very well. But when the foreign money comes in, the foreign money is going to go for liquid and blue chip and high quality names. So clearly, I think IDX30 and LQ45, all these stocks is going to do much, much more better purely on the improved macro as well as on the re-rating. So clearly, I think we are recommending Indonesian equity.
Yeah.
Indonesian bond, once again, we love it. I think clearly we are looking at a 10% return in
Wow.
front of us in 2025. So we should invest in that. And so in addition to that, we like the ASEAN very much, to tell you the truth. I think we are the only player in the market, even though Indonesia was chairing the ASEAN grouping. We are the only fund manager who came out with an ASEAN fund, and that is doing extremely well. It is one of the best performing fund over a last 3 months period as well. So clearly, I think that is a great, we expect ASEAN to do well in the next 5-year period as well. So clearly, that is a great opportunity.
Yeah.
And there is a lot more that we want to bring to the table as well. We wanted the market to move into the right mood, so that we can bring in a lot more solutions. So we have 3 product pipeline in our organization. So hopefully in the next 3 to 6 months, we will start rolling out one by one to take care of the customer's interest.
Yeah, we waiting for that in Bareksa.
Nice. Okay. So now it's time for invest, yeah,
Yes.
and invest for long term, not
Yes.
only day trading. Oke, nice, very insightful. Semoga bermanfaat buat smart investor semua. Terima kasih Pak Naresh sudah join di Bareksa Insight podcast kali ini. Sampai jumpa di podcast berikutnya.
Once again, thank you for the
Thank
wonderful
you.
opportunity and the wonderful hospitality
Yeah.
as well. Terima kasih banyak.
Terima
Terima kasih.
Thank you.
Thank you.
Bareksa Insight.